if interest rates go down, it'll be because we're in a very severe recession. And of course, the Fed will be the last to know. So the Fed can temper inflation, but at a very high cost, the cost of a very severe recession. The United States is in a recession. The standard rule of thumb definition of a recession is 2 consecutive quarters of declining GDP. That's widely accepted. I have to explain to people, we in the United States, at least, we have no official arbiter of recession and recovery. It doesn't exist. There's no branch or unit of government that does that. We do have something. It's a private group called the National Bureau of Economic Research. They're based in Cambridge, Massachusetts, somewhere between MIT and Harvard. It's 9, PhD economists, undoubtedly leaning to the liberal progressive side. Is to say that professors is and they're liberal is redundant, but that's the case. But so they make these determinations. And to say, of course, the 2 consecutive quarters of declining GDP is the rule of thumb. They do take a couple other factors into account, just to be fair. They look at unemployment and consumer demand, but basically it's what I just described. So the United States had 2 consecutive quarters of declining GDP. We were down. These are official government numbers from the Commerce Department. We were down 1.6% in the first quarter. We were down 0.9% in the second quarter. There you go. So it's a recession, but you'll hear the White House and Janet Yellen and others saying it's not. But what you have to understand about this National Bureau of Economic Research, because they're private, because they do their own thing, they don't come out and declare a recession the minute the first piece of data shows up. In fact, they're notorious for declaring recessions started after they're already over. And what I mean by that was true, but a typical recession lasts 2 quarters, some of them last 3 quarters. It's very unusual to have a recession these days since the Great Depression that goes on for a full year. So 2 quarters or maybe 3 at the most is kind of a normal recession. Well, they often wait 9 months, sometimes a year before deciding that a recession started, which means it's probably over before they told you it started. So if you're relying on them, don't hold your breath. They may have something to say late this year. They probably want to see 3rd quarter results. They probably want to look at some other data. Don't be surprised if they wait until after Election Day. A declaration, even an unofficial declaration by them, would not help the Democrats' chances. So since they're all progressives, it would come as no surprise if they waited until December, in other words, after the November midterm elections, to make a decision. So, but I don't have to wait for them. I'm an analyst. I have readership. I provide a lot of advice, and so do others. I'm not the only one. And I have no hesitation in calling it a recession. We did, in fact, have 2 consecutive quarters of GDP. Now, over to China, the world's 2nd largest economy. China reported in the 2nd quarter that they grew at 0.4% annualized. Of course, 0.4% is, kind of a rounding error away from 0, or negative, if you will. But 2 things. Number one, first of all, you have to compare that to 30 years of close to 10% compound growth, not 0.4%, but 10% compound growth. And even in recent years where they're sort of stuck in the middle income trap and not growing as quickly, they were producing kind of 5-6% growth in a good year. So to come up with an annualized rate of 0.4% is pathetic. But we also know the Chinese lie about just about everything. And so they are, it's almost certainly the case that they are in a recession also. If they're willing to admit 0.4%, which is pathetically low, you can bet that the reality is negative. And there are other private surveys and other more reliable sources that do say that. So China, it looks like they're in a recession as well. Of course, that's a combination of Xi's zero COVID policy. Shanghai's a city of 26 million people. Beijing's a city of 22 million people. In recent months, they've both been locked down, 48 million and close to 50 million people locked down, stuck in their houses, arrested on site, except for some essential workers who have to be tested on a daily basis. I mean, completely destroyed the economy. And they will continue to do that because that policy from a public health perspective won't work. I mean, you can't stop this virus. The only way to stop it is to do what Europe and the United States did, which is for everyone, pretty much everyone, to get it. In other words, COVID is the vaccine for COVID. If you get it, your chance of getting it again is quite low, not zero, but quite low. They said Joe Biden got it twice, but it's really just one time. They just got a negative test in the middle because even the White House doctors don't know what they're doing. But the point being, it's called herd immunity. It's not a new or exotic concept, but if enough people get it, then the virus has nowhere to go, and then it dies out. And that's how. There was no vaccine for the Spanish flu. It killed 100 million people or more around the world, but eventually it mutates and people get antibodies and get resistance, and it fades. And is no longer a danger. China will never get there as long as they keep this lockdown policy. I mean, the way to get it is just kind of let it rip. I mean, take care of older people, get the older people the vaccine, use therapeutics. I'm not saying do nothing, but do it in a very targeted way at the most vulnerable groups. Children aren't vulnerable, young adults aren't vulnerable, and lockdowns don't work. There's very good evidence for that. D.A. Henderson, winner of the Presidential Medal of Freedom, wrote a paper in 2006 and said lockdowns don't work. That was at the time of the swine flu, but none of this is news, but we seem to have incompetent public health officials and a lot of politicization going on. So China is a mess, and not just that. There's a historic decoupling going on between the Chinese economy and the U.S. economy. It follows that if the U.S. if China is the factory of the world and the U.S. isn't buying anything from the factory, well, the factory of the world is going to be in recession also. In other words, a slowdown in the U.S. means a slowdown for China because we're major trading partners, and same thing in the EU. EU data is mixed, of course. It looks like France and Italy are doing a little better, and Spain, but Germany is in horrible shape. You take the EU as a whole, they're close to a recession, not quite there. Germany, again, probably in a recession. So Japan, I just got back from Japan. It's nice to be able to travel again. I haven't been there in 3 years, but they're in a recession as well. They're ninth recession since 1989. So that's kind of tells you all you need to know about Japan. But my point is, we're in a coordinated global recession. Global recessions are rare. It's not rare to have it, maybe in the EU, maybe in China, maybe in the US, Japan, et cetera. But for all major economic blocs, the four largest economies in the world, US, China, Japan, and Germany, to all be at or near recession is a disaster. It's going to get worse. Because the monetary authorities are tightening to lean into the inflation. So we have, and of course, it used to be conventional theory, Phillips curve and so forth, that you couldn't have inflation and recession at the same time. You could have inflation and high nominal growth, or you could have a recession and no inflation, but somehow you couldn't have no growth or recession and inflation. But we did in the late 1970s. It was called stagflation, and we have it again, except it's different. I wouldn't overdo the comparison to the 1970s. We have unique problems, mainly because our inflation is coming from the supply side, not the demand side. So global recession underway, will get worse before it gets better. An environment where inflation is not yet under control and interest rates are going up. So pretty bad scenario all around.